This is My Stock Scanner Live. It's the Thursday edition. And if you have been tracking the market this week, you know this is when it starts to pay off. And if not, well, you can still subscribe to our YouTube channel and then you'll get to know all about the shows that we're doing in the future. Give us a like on Facebook. The man next to me, Liam Flavelle, is, I was going to say the only rooster in the nest today, in that sense that Hans Henrik is on the road. So,
So
uh,
in English, are you calling me a cock?
see, I did the polite version, but I
Okay,
guess you're Irish, so you'll always go for the
there we are.
limerick, I
Go for the
guess.
gutter.
But the fan of Hans Henrik, he'll have to wait, or she will have to wait until 5 o'clock. Then he's on the show for that. But Liam, if I look at the markets today, I see red a lot of places. I see the tech stocks in the US go up in green. It's like the market doesn't really know the direction today.
Who'd have thought? Yeah, we've got a problem in the Straits of Hormuz that's still there, and no matter what happens, there's a lot of confusion what's going on. There's also been a lot of profits recently, and I suspect that's what's that may be going on. But the S&P 500 is green and zero rather than red and zero on my screen at the moment. So pretty much break even in the US.
It's break even exactly, and even the Dow Jones was up in the notorious 50,000 territory
Wow,
just a minute
nosebleed.
ago. Once again, welcome to My Stock Scanner Live, where we cut through the noise and focus on what actually matters in the market. Today, Denmark takes center stage. We have earnings from Maersk, Zealand Pharma, and GN Store Nord. And we also going to be talking about a monster move in Supermicro yesterday that went up by 25%. And also some what we find super interesting premieres on our show. We will have a top 5 of Chinese AI giants, and then we debut some portfolios that we've been working on for quite a time. We have new portfolios in MyStockScanner, so fasten your seatbelts. We have a busy show for you. Number of the day, 152.1. But we start in Denmark because we had a trio of earnings that is super interesting. Maersk, Zealand, and GN Store Nord. And let's not hide it. Good news for Zealand, jumped 12.6%, or is currently jumping 12.6%.
It did. They had results that were sort of not as negative as people thought they would be. They've also had some decent news on the weight loss for non-diabetes patients, which was about 16.6% of their, not about, it was 16.6% of their body weight that they lost over a certain period of time. I think it's 15, 26 weeks, something like that. So it was actually quite good news. I think that released a new tranche of cash from their backers, and they've also announced a buyback. So, from a stock point of view, just looking at the playbook, not one that we'd particularly like to touch, I must admit. So, when you look at it, they have got some green. You've got the returns coming in, and the free cash flow started coming as well, which is a good sign. So the company's on the mend, and the quality score is pretty good. From a valuation point of view, it looks like a roller coaster. Well, not even a roller coaster. It just looks like a slide, basically, all the way down, and that's what it has been doing sort of over the last years. And we've talked about it quite a few times.
Yeah.
It's not one that we'd have been in since back in 2024.
And then GN Store Nord is also one of those where we have talked a lot about it, but the reason why we're not going to talk too much about it today is because they basically sold their hearing aid division away from the company lately. And today earnings, they are down 6.6%.
Yeah, again, yeah, because of that, we wouldn't be that interested. They don't look too bad technically on just those key 3 areas I always look at, the quality score, the earnings per share, and the PEG ratio. The quality score is hurt because just there's no real, everything's quite volatile on the earnings per share. So that's probably where it's being hurt a little bit in there. But the returns going down, the free cash flow is coming up though. So they're obviously doing something not too bad in there. But from a valuation point of view, yeah, the numbers show this, but actually with the history and the dive, we probably wouldn't be that interested in the stock. And again, it's another one that we've talked about quite a few times.
Yeah.
The MTIs are still in red as well, so not something we'd
It's
go
not
now.
something we're super excited about. Let's
No.
just say that. And let's go to Maersk. Just take the big one as well. The big old company that has been a brand in the Danish market for years and years and years. They're not as big as they used.
1904.
Yeah, exactly.
Your birthday, wasn't it?
Something like that. You're saying 18, right? Okay. But they're down almost, well, the B stock is down 8%, A stock down 7.6%. Um, it's also a stock that we wouldn't be in.
No, and yeah, and you can see why, because everything's a sea of red. Yeah, the quality is good because of its pedigree and everything, and its backing there. But everything else is wrong. And the key thing that we've said for quite a while now, the earnings are due to go negative. So if you look down here, the analysts think they're going to go down in 2027 down to and actually make a loss of $50 per share. That's down from 185 that they expected at the end of 2025 and $17 this year. So analysts are not particularly hot on the stock, and that is why obviously it's going up like it is. But it's one that there is just too much diversity in those numbers and the analyst estimates and what everyone thinks. It's not one that we'd really be interested in getting involved in either.
Let's go to a rocket instead of a stock that seems to be going down. We and this one almost bamboozles us and confuses us. I'm almost going to say on the same level as what's happening to Maersk sometime. Super micro. Liam, you are a tech guy. This is a stock with a story, whereas Maersk is the proper do it all right, due diligence, all that.
It's
Then we have
the old
Supermicro.
gentleman. Yeah.
Exactly,
Um,
exactly. Up yesterday, Supermicro jumped almost 25%. And we don't know what to make of it when it comes to their business practices.
I think we do. I don't know what we can say about it legally, but I think they should probably be sued for having the word "super" in their name because I think they're anything but on there. If we look at their numbers, I mean, as a company, they look really good. They've got a 96 quality score. The earnings per share is going up, and free cash flow is going up. The returns are a bit, yeah, but I could forgive them for that. And their PEG ratio is really good. So, from a first point of from our first point of view, it's a quality company. And also, if I just reset this, you can see that there is value in there as well. For maybe not this year, but if you hold till next year, and they're nearly at their year end now, so you're only talking about 12 months out. There is actually some decent value in there, even with the 25% increase from last night. The problem is where you trust to put the line. So the analysts have gone really, really low, just where it's bounced down here, and that's probably where we'd go here. The reason it came down there, and the reason it came down there, and the reason it dropped, you can't see it, is back in 2018, I think it was, is because they have a habitual habit of lying about their accounts. That's the easiest way of saying it.
Yeah.
And they've misstated accounts. They've also sold Nvidia chips into China, and they've been found out about it. So there's an awful lot of people that are very, very uncomfortable with investing in the company. Is it quality? Is it good? It's in exactly the right area. It supplies data center servers into the data centers, which I've heard is quite a big thing at the moment.
Oh, I heard
And
so too.
yeah, so and that business is only going to get bigger as well. So yeah, if you wanted to punt, maybe, but it's with that, you'd have to count your fingers if you shook hands with them when you handed over the money.
Yeah, let's not get deeper into that. And as you said, there's a limit to what we should say on air in regards to them as well. But we'll talk, allow us to talk a little bit about ourselves in that sense that we have some really big news, we feel. And so far, we have always been talking about our model portfolio because that's what we have been doing. And last year, we made a profit of 34.48% on, or we had an upside on it of that last year. But we have been preparing some things that now we're ready to roll out, and that's a couple of extra portfolios, and one is an ETF portfolio. Tell us more about it, Liam.
It certainly is. There are two aspects to this, three aspects to the whole thing, actually. So we've got two new portfolios. One of them is still very much in test, and it's only been running in test for a month. I think it was the 8th of April that we started it. We've got another one, which is the ETF portfolio, which we'll show now. Both of them are based on a brand new indicator that we've designed, and it's totally different from anything that we've done in the past. But it's stuff that Hans and I have been working on for quite a while, and bringing in sort of some of the favourite indicators we like that we like over time. From a portfolio point of view, so this is an ETF rotation chart. I think that's the right one. Am I just in there? There we are. Yeah, so the ETF rotation chart, you can see here, we've been running it since the beginning of January, since the start of the year. We are up 9%. And it has been quite a tumultuous year so far this year for one reason or another. So we've got some pretty good stats on there. This is compared to the S&P 500. I believe it is the S&P 500 in krona, Danish krona. So we get all the foreign exchange sort of rates in there as well, and benefits, or the tailwinds and the headwinds. So basically, we've got almost a 10% return. We've got the volatility, which is lower than the S&P 500, which means that our Sharpe ratio, which is pretty much our returns divided by the volatility, it's slightly more complex than that, but of 1.9, fund managers kill for 0.6. So it's doing pretty well. And what we're in is up to 10 ETFs at any one time. What we use as well is a stock map, which I know we've talked about for a long time. We've been testing it for a long time, but that's because we don't want to release something that is actually, then falls on its face in a few months because it hasn't handled something. We are actually extremely happy with both the MTX and the stock map, and they're going to be rolled out very, very soon. But effectively, with the stock map, we are looking at a way of managing your viewing the stocks that you are looking at, and whether they are improving, whether they're leading, whether they're weakening, and whether they're lagging. And basically, the really simple way of doing this is, if the stock is in blue or green, that's brilliant. If it's starting to head down to weakening, it means the cycle is changing, and we're very aware that we might need to sell or just not be interested in going in. Lagging means we probably don't touch it. But as soon as it starts coming up here, then we start getting interest again. So it's a big wheel. So that very quickly, the stock map, but we will go into that in more detail in the next 3 to 4 weeks as we're releasing this stuff.
Can I ask one
Yeah.
question in regards to, you mentioned there was 10 ETFs in there. Is that
Yep.
is that a limit? Is that how many you want in there, or what's the case here?
That's the limit we've got at the moment. So we have 40 stocks in our 3-point playbook portfolio. But that's because they're individual stocks. We want to diversify those a bit more. With ETFs, they're already made up of sometimes hundreds of different stocks within them. So we're happy with the diversification we get with just 10. To be honest, this works with 15, 20. It's just slightly more work because you've got to manage 15 or 20 stocks. So we're using 10 here at the moment. And you can see here, basically, the average that we've seen when stocks go up is generally around 15%, which for an ETF is huge. And what we do is we pick stocks that are in that rising category in the stock chart and the stock map, and then we make sure that we look behind the scenes to make sure the stocks in it are pretty good. And then we use something called the MTX, and this is, I'll just show a couple of sort of excerpts on the MTX. It's basically an indicator that tells us when to go into a stock. So here you can see it's shaded in green. This is CoreWeave that I just picked out. They've got numbers today. We didn't know, this isn't in sort of our test portfolio that we got at the moment, I think, but we got an indication to go in a couple of weeks ago. And since then, that's started to go up. So you can see that is a good indication of what a good entry and quite early into the trend. It works well on ETFs as well. You can see here we got a call back here in November. We got a call back here in January, just on an oil ETF, and this is the same across a lot of commodities that we do as well. So this works quite well on those sort of areas that we would have come out here and probably come out somewhere around here. I would guess on there for a good run. So what we've found with the MTX is, if it works and when it works, and it works, seems to be quite a lot of the time. We haven't got any stats yet. We get some really, really good risers. When it doesn't work, we tend to get thrown out quite quickly. So we might lose, a small part of your percentage of what you put into it.
And in that sense, it's again what we do on MyStockScanner in regards to our model portfolios is that we do not like drawdowns, in that sense that we try to limit them very much, and means that we get out in a hurry and not take the big dive down, and then we can always go back in again. I know there's a lot of questions in regards to what you just presented here, and we will get back to it. We will talk more about it with our members, because
Yeah.
those are the ones that get to see under the hood and be explained fully how and when we go into various ETFs and stocks and stuff like that, and what it is we're looking for. Liam, I'm going to limit you on this because we also have another premiere today. We're going to do a top 5 of Chinese AI. But before we get to that, I'm going to swing you around the US consumers, because right now there's a blinking light saying discount. We saw some numbers the other day talking about a K-shaped recovery where the rich people spend a lot of money. Poor people don't spend anything, hardly anything. And today, Whirlpool, and the reason why we're going to talk about them is because they are selling appliances. And just like an indicator, if they can't sell any appliances, that's because people are sitting on their money. They don't have money to spend. They came with earnings dropped 16%.
Yeah, they
What
did,
does it tell
and
you?
yeah, I mean they basically turned around and said, you know, the consumers aren't buying, and that sort of funnily enough, the investors didn't like it. This Whirlpool is in. You can see here, you know, it's a stock that again we wouldn't be in because it's just there are far more interesting stocks out there from just a green point of view on the screen to my eyes. But and you can see free cash flow over the years have gone down. What happened was during the COVID years they had a particularly strong showing as people had extra cash because they had tax rebates and things like that, and then they spent those, and then it's been dwindling ever since. Whirlpool's a stock that over the years, I mean, we had it as stock of the day last year sometime, I believe, for some reason, but over the years it's not been massively well managed, or maybe it's had too much debt and those sort of things to really make a good go of it. What is happening is durable goods, people can't afford them at the moment, and that's a big tell for us on where the economy will go and where all those factories that make these things are going to go. This all has knock-on effects to the economies of these countries and the tax rebates that come in and so on and so forth. So it's not a good sign out there for particularly anyone.
In a minute, we're going to talk about something else that we look as an indicator, and that's Bitcoin. It's not because we invest in Bitcoin, but we keep an eye out for it, because sometimes we tell it's because it's risk off, it's risk on. We'll explain in a minute why we're going to be talking Bitcoin. But right now, Liam, 2 premieres in one show. How about that? We're going to talk a top five of Chinese AI stocks. We won't get through all 5 of them because the top 3 will go to our members. So you can sign up, become a trial member, and get a free month for sure. So do that, and you get to see all of them. But right now, you're going to tell about 2 of those 5s.
Yeah, the two are Alibaba, which is probably the best pure play AI that you can get that's on the market and easy to access as well. So I particularly chosen in the 5 stocks that are on the US exchanges, and there is something. A lot of them are called ADRs, which are American Depository Receipts, which is not actually a share in the company itself. It's a share of a second company sitting in the Virgin Isles somewhere or something like that, some tax haven. So there's a bit of accounting sort of rigmarole that goes on there, but it means because they're on the US exchanges, it means we can actually access them quite easily without going to another exchange. Alibaba is a stock that's massively up and coming. They've got models called the range of models they've got is called Qwen, QWEN. They are used actually worldwide. They're open source, which means that everyone can see what weights the models have and how the models actually work internally. Whereas with ChatGPT and Gemini and Anthropic's Claude, you can't see what makes it tick unless they make a mistake and put all their code base on the internet, as Anthropic did a few weeks ago. The Qwen system is used by people like Airbnb, so they're not small companies using this, and they're cheap compared to everyone else as well. So that's great. As a company, they've been struggling. Barber has various other businesses as well. You can see sort of in the blurb up here, it has wholesale marketplaces, it has games companies, it has everything. It's a bit like the Amazon or Google over there, a bit more like Amazon, I would guess, than Google, because that's Baidu. You can see the drop that analysts are putting forward as the drop in earnings per share this year, and then it will come back up next year. all these Chinese companies are in the middle of a massive bun fight on costs right now. So that's where the problem, that's where these, this red is coming in. Free cash flow is suffering, return on capital is also suffering. Alibaba has been massively putting a lot of money into AI as well. So they've been heavily investing, and they're hoping that will pay off. And certainly the analysts think it will pay off as well. So the analysts are actually up by, they're by my blue line here. So they're just hiding underneath. But this is where the stock has bounced right on the blue line, and where the analysts think it's going to be, and it started going up. So actually, quite an interesting company from a playbook point of view, with a decent upside, up to 60%, maybe 35%, something like that. Is it a good time to buy? It's just below its 200. It's above its 50. You got a green just today on the daily and a red on the weekly. So I would actually wait until that came up here, bounced, and then came back up again. But Alibaba, really interesting company. They could be one of the big winners in AI going forward because they've got that open source cloud.
And I'm going to put you on time restraints because time's running for us. But we give one more. As I said, the top three we hide for the members. We give them to the members. But one more. Give us another taste.
PDD, everything's green. I won't go through too much on the playbook, but free cash flow, fantastic. PEG ratio, great. Earnings per share is going up. From a valuation point of view, they've been dropping. And that's again because of the competition that they've been having. And over the last year, some idiot in the States actually put tariffs on and closed off their postal service to foreign companies and things like that. So they've not had a great time over the last year. But they do seem, just on the chart, to be hitting that analyst line or my red line and then bouncing back up. And what we like on this is it's following a trend over a month or two to say, actually, that's going in that direction. So that's good. That's a great valuation. So, and we can see sort of decent upside as well, 63% on my base case. Even if it stayed where it was, by the end of this year, you're looking at an 11% rise in my worst case scenario. So pretty good stats there. Wouldn't necessarily buy them right now. They had a big bounce yesterday, just above their 50-day, which is this green line here. There's a big lump to go up to its 200-day. It's not stock we'd buy right now. It's certainly one on the watch list.
Absolutely. And Liam, we haste on because sometimes Hans Henrik, you and I, when we have our morning meetings, we talk a lot about what is the value of Bitcoin, because we say if Bitcoin is going up, then it's a sign of risk on. If it drops, it's risk off. Is it that simple, really?
That's what we use it for. Other people trade in it. Some people even make money on it, I've heard. That's certainly, at the moment, it's probably MicroStrategy. They've got quite a low level to break even.
Let's bring them up, because the thing is that's what we want to talk about as a final here on the show, apart from number of the day. But MicroStrategy have been saying all along, we are buying up all the time. We borrow against what we have, and then we buy even more. But now all of a sudden they say, yeah, we might sell some. What's going on?
Yeah, well, he actually said he'd rather sell a kidney than
maybe he
than
did
sell
that
Bitcoin.
already. So
maybe he's run out of kidneys and he's on some sort of machine somewhere, and he's thinking, yeah, maybe we'll sell some of this. So MicroStrategy came up. They're like a hedge fund, or they're basically buying as many Bitcoin as they can because they think it's going to go to the moon, or whatever their phrase is these days. And they could be right. Who knows? Bitcoin is something very difficult to value because you can't. There's no tangible basis for it behind the scenes. So they could be absolutely right. The really interesting thing here is when we look at, if we just pop across to here, would we have been in it even from the MTX point of view? No, the question is absolutely not. But what we were talking about today in our meeting for the show was we could easily see this maybe going up to 320, which is one of the calls recently from a software house, simply because if you get Bitcoin suddenly shooting up, which you could do if the war in Iran ends, we get a peaceful outcome of that could easily go back up to 120, 130, in which case MicroStrategy is going to go in the same direction.
Exactly. See, that's how quickly we can round off our talk about MicroStrategy, not because that we are not willing to discuss it, because it is an interesting case. And as you just said, an analyst put it up to 320 as their sort of goal for the stock itself.
One thing I just add before you go to number of the day, Tesla just showed a green on our swing trading MTX
See, you're only
indicator.
bringing that up because Hans Henrik is not here. That's
It's,
the only.
going to really wind him up. He's going to hate it. It's brilliant.
But
It's gold.
he will be here in 35 minutes when we do the Danish show. But Liam, I would say the number of the day is really your number of the day. 152.1 liters.
Oh,
That's the Czech Republic. That's how much beer they drink in a year. Would you please note that Ireland only comes in as number 4 with 100.6 liters?
I can't see Denmark on that list.
Well, it's because we only drink 57.76, which means that
Oh,
every time Hans
bless.
Henrik and I have a beer, you have 2. So basically, you're having happy hour every time we meet up.
Yeah, but when we meet up, I don't call it happy hour.
No, I know you don't. But anyhow, we're coming to the end of the show. We still have a good chunk of market time left. US market just opened. We're going to be talking more about that on the Danish show here at 5 o'clock. And then, of course, Friday is still there. So there will be a lot of exchange going on. We even have some earnings coming in towards the end of the week here. We're going to see numbers from TerraWolf, Enbridge, and Brookfield Asset Management, and then there's job numbers coming from the US. So lots of reasons to follow us on YouTube, and also check out MyStockScanner.com and take a free month trial, and look us under the hood and read the articles that Liam puts out each and every week in regards to tech and a lot of other things that you can have. Show will be back tomorrow in Danish at 5, but remember, we have a Danish show this afternoon at 5 o'clock as well. Liam, always a pleasure. If you're not at 100 liters yet, I'll say cheers and have a good one, okay, my friend?